Hi traders, welcome to the Ken Tank, where you'll learn how to avoid getting eaten by the sharks on Wall Street. It's always all information for educational use only. I'm not making advice about what to buy, sell, or hold. Hi traders, this is Ken Calhoun, president of Day Trading University. In this video, let's take a look at why the E-minis are especially horrible to day trade most of the time. Despite an abundance of an infestation of E-mini day trading chat rooms out there, the truth of the matter is the E-minis are typically very choppy and range bound, and most of the time are completely unsuitable for professional day trading. Let's look at today, March 15th, or yesterday the 14th. This is an especially bad pattern called an expanding range breakout, and it's bad because people who trade like most of us do based off of horizontal support and resistance lines, you would have gotten stopped out consistently trying to scalp this. You go in long on a breakout, only then to get stopped out on a retracement, then maybe go to short down there and then get stopped out as it bounces, then try long again and get stopped out as a false breakout pulls it back down, and so forth. That was yesterday. Today, even worse, very choppy trading range. The truth of the matter is that the E-mini contracts are usually only worth trading at 2-day low breakdowns, days below the previous day's low, if they continue on down in a strong sell-off, or above the previous day's high on a small gap continuation to the upside. The vast majority of the trading days, though, 3-4 out of every 5 days, they're not worth trading at all. So if you've ever tried day trading E-minis and have struggled and failed, it's because it's a completely unsuitable instrument for professional traders to trade. You can try and grind out 3 or 4 ticks in a row or something and get stopped out more often than not, but the truth of the matter is E-mini day trading is a losing game unless you only trade the 2-day highs and 2-day lows. And that's true for any index tight instrument for that matter. I mean, you can look at the spiders and you'd get the same exact type of a low odds trading chart, right? Or the diamonds. The diamonds look a little better. Or the Qs. Chop, chop, chop. But trading the E-mini futures are really bad choice for professional day trading. Even if you get better leverage, that's just going to accelerate your losses faster because you overtrade choppy charts on margined accounts or larger leverage, which is a really unwise way to proceed as a trader. You don't want to trade instruments that go sideways and are likely to stop you out. You want to trade large instruments, large moving instruments, like say shorting VRX. I'd call this short for my traders on the way down today. Or ZYNE, right? Went from 11 to 21, right? Nice big range movers. Or things that have equally strong opening range breakouts that are likely to run in a single direction. When it comes to making a living as a trader and you're looking for professional setups to trade, you need to find those selective charts that are most likely to make you money. The E-mini futures are simply not it. It's a losing game. I like to call it the evil E-minis. Now, I have taught traders how to trade the E-mini futures, but that's only at 2-day low breakdowns on those rare sell-off days. But the other 80-90% of the days, your time is much better spent trading charts that actually run up, whether it's a gap continuation or a big sell-off chart, either on a continuation short or pivot if it bounces later or whatnot, but something that has multi-point ranges that's cleanly defined and easy to trade makes for a lot more sense for a breakout day trade than does an instrument that's as choppy as the E-minis. The data speaks for itself. The truth of the matter is, go back and look at, whenever watching this video, I'm recording it here March 15th, 2016, but whenever you're trading, go back over the last week worth of E-mini charts and see just how dang choppy those things are. And ask yourself, could you have actually made money trading it? The answer is largely no. This is really choppy. You get stopped out, stopped out, and the rest of it. Right? The only time you want to trade any indexed instrument, and that's true also for instruments like the XIV or the UVXY or some of the other ETNs or ETFs that are tied to the broad markets, are during strong market days, right? Which may be 1 or 2 out of every 5-day week at best. You're not going to get big strong moves out of the market every single day. You will, however, get big strong moves every day if you do a little bit more homework and a little better identifying strong breakouts and breakdowns and wide range moving instruments that you can actually capitalize on. So give it some thought. That's food for thought, is trade where the odds are good, not where they're choppy as heck. Of course, the people who just run E-mini trading rooms don't want me to tell you that, but that's kind of the elephant in the room, or the truth of the matter is, if you look at these charts, the money's not to be made there. Always follow the money, right? I don't know about y'all, but I trade to make money, and I like to trade nice trending, strong, easy, wide range breakout charts that are likely to run either up or down, like this sign did yesterday. Nice big open range breakout, secondary late day breakout. Today it did a nice big drop. Valiant also did a nice huge drop from 58 to 38. If you get in anywhere on these, say for a short on the way down, or anywhere on the ride up for a breakout, much easier odds than trading instruments that are choppy, especially if they have expanding range breakouts. Like this, ERBs, expanding ranges, where it's kind of a funnel pattern. That's the death or doom of a trading account. So don't focus on the E-minis. It's kind of what I call fool's gold. Just because you can get larger margin or leverage out of it doesn't mean that it's worth your time and energy as a professional trader. What is worth your time, or at least my time as a trader, is something that if it does a minor gap and continues, I can trade it. And it's got a wider trading range, it's likelier to run than the rest of the instruments. Here's one last chart to look at. 3D, another good example, one that ran up from 12 to 15 yesterday. Then it did a minor gap continuation. Remember, gaps usually continue in their trend, so minor gap continuation. Found support off previous day's support, starting to come back to life here. Even a cheap instrument like this with only a 1 or 1.5 point trading range is markedly superior to trading something like this, where you're just going to get stopped out. That's the truth of the matter. And this is Ken Calhoun coming at you from the original Day Trading University, teaching the world's traders how to actually trade the markets the right way. So anyways, best wishes for success. Focus on better charts, and just say no to the E-minis unless you're at a big rally day or a big sell-off day. The other 90% of the time, you want to trade professional breakout charts with me at tradingtheopen.com. Thanks so much, and bye-bye. Traders, for more on professional stock day trading, be sure to try my tradingtheopen.com live trading room. For nearly 16 years, we've been the traders' live room of choice. We've got a huge membership. It's a great place to come learn how to day trade the stock market. We also cover E-minis and Forex, but mostly it's for stock and ETF day trading. One of the things that we're really proud of is all the kind words and testimonials from hundreds of traders worldwide that have written in over the years to tell us how much they've enjoyed their live room experience. You can see video testimonials from my seminars. You can see hundreds and hundreds of comments from traders from dozens of countries worldwide that tell you just how much the room has meant to them in terms of really making a difference. I got more testimonials here than anyone in the whole industry for a live room. You can take a look at tradingtheopen.com/testimonials. So really pleased to be of service to so many traders around the world. We even have a complete money-back guaranteed trial offer that you can certainly take advantage of. If you want to give it a shot for a couple of weeks, you can join me and all of our traders. We've got a 2-week trial of just $47. You can see sample videos of how it actually works. I'm a featured money show speaker and author for Stocks and Commodities magazine and equities and the rest of it. So been around for a long time, and celebrating our 16th year in business. It's been great seeing the huge turnout from all the traders around the world and all the kind words from everybody. So if you want to learn how to day trade the stock markets, this is the right place to go at tradingtheopen.com. Really popular too. You can see we got a big number of people that like to show up, and it's great to see so many traders finding value. Compared to other places that just look at choppy E-minis, we like to look at nice strong charts. For example, Urban Outfitters and others that actually have multi-point runs for us, not choppy instruments, and actually teach you step-by-step how to trade with well-explained entries and exits, downloadable videos, and the rest of it. So anyway, I hope to see you as a member, or at least a trial member, at tradingtheopen.com. We've trained so many thousands of traders over the years. It's a good opportunity for you to pick up some strategies for exactly how to trade the markets correctly. So join us now at tradingtheopen.com/trial, and I'll see you in the live markets with all of our other traders. Thanks so much, and best wishes for successful active trading.